Hello guys, so this lesson we are going to look at the weekly profile and then the daily profiles within the weekly profile. So this week I was bullish on the euro dollar. I don't know if you guys did watch my weekly analysis video. I was bullish for this week. So before this weekly candle opened and just finished, I was bullish. After the close of this previous week's candle, I was bullish, and I was bullish for the reason being price closing above this weekly fair value gap. So I was expecting it to act as support to push price to this buy side liquidity, and then this buy side liquidity, and then inside this gap, I wanted to see price come and fill the gap. So that was the reason why I was bullish. Don't worry, we will go into bias, the weekly bias and then the daily bias. We'll go into it later to know how to identify or anticipate your weekly and daily bias. But now let's take it as if we are on the same page. We all were anticipating this weekly candle to be bullish, right? So let me first of all use the replay button and then delete that weekly candle so that we can start looking into it. So yeah, this was how it was, and I was bullish. So if I'm bullish for the week, I'm expecting the low of the week to form either on Monday, Tuesday, or Wednesday, right? Even though Tuesday and Wednesday has the higher probability of forming the low of the week, sometimes the low of the week can be formed on Monday. If Monday trades into that discount PDRA, we could anticipate Monday creating the low of the week. Now let's go to the 1 hour chart and I'll show you where I was anticipating the low of the week to be formed, and I said it in the weekly analysis video. So I was anticipating the low of the week to be formed within this fair value gap. So this was last week trading. Friday gave a very large extension. Okay, so last week trading was from Monday to Friday, and within this week's trading price action, this was the only area that was interesting to me. As you can see, we don't have any significant level aside this fair value gap. So I was looking at price forming the low of the week within this fair value gap, and I was anticipating Monday doing so because Monday was very close to it. So on Monday, I was watching price to see if we can get into it to form the low of the week, and I'll start looking for buys. Okay, so let's use the replay tool. So this is still Friday of last week's candle has not yet completed. So Friday was completed. Now we are in Sunday's candle, and now here comes Monday for the new week. I'm expecting the low of the week to form here. Since we are very close to it on Monday, I was expecting Monday to dip into it to form the low of the week. Now when it comes to the weekly profile, you should look at the weekly profile on the 1 hour chart. Is that okay? On the 1 hour chart. So your first confirmation should come from the 1 hour structures before you go to lower time frame to look for your power of threes and all of that to look for buys or entries. So now I'm looking for price to dip into this 1 hour fair value gap and also inside this weekly fair value gap on the left side that we've closed above. So let's see if price did, and then boom, let's see. Okay, price didn't make it to it, so we are waiting patiently. We are not going to allow price to trick us. This is where we want to see price come to. So the low of the week is not going to form at any random area in price. It's going to form at institutional reference points. Okay, so don't chase price. This is your institutional reference point, this fair value gap. We are looking to see price come into this area to form the low of the week. So even though we broke structure on the 1 hour chart here, we don't trust this move yet because price is still hovering above this PDRA, and this is where we want to see price come to. So boom, now I played it too fast. Let me go back a little bit. Okay, so boom, now we've tapped into the 1 hour fair value gap clearly, and also we've taken CSR liquidity of that low. So liquidity has been taken inside The fair value gap, this low is landing sessions low. So landing sells are liquidity. You know that session highs and lows has liquidity. So landing session low has been taken. Let's see if we get market structure shift. So boom, we have our market structure shift on the 1 hour chart. So now we can confidently anticipate this being the low of the week. So now we can start looking for buys right from this Monday. We are now this green indicator, and then the yellow you're seeing here is my Q zones. This is the landing Q zone. This is New York Q zone. We are still in New York Q zone, so we can look for buys if they present on 5 minutes charts. Okay, so you first of all need to confirm your low of the week, either Monday, Tuesday, or Wednesday on the 1 hour chart before you start looking for any entries on 15 minutes or 5 minutes time frame within your Q zone. So this is an important point. I hope you guys take important points down. You should be writing, have your notes pad or notebook beside you with your pen and start writing this important point. So now our low of the week has been confirmed. Break of structure to the upside after tapping into our 1 hour fair value gap and taking sales side liquidity. Now let's go to the 5 minutes chart, and if you have any entries, we can take it. So now okay, so New York Q zone is over, but we are in New York close Q zone, which is between 10. Look at the time as this here as I move the cross here. So the cross line. So 10 to 12 is the landing close Q zone. So we are still within the Q zone. We are still within the Q zone. We have an order block here. So that can be an entry. And we'll be targeting 3R per trade. So boom, we've entered the trade. Stop loss here. Let's target 3R. Let's target 3R. So boom, profit target would have been hit. Beautiful. Beautiful. So plus 3R. We are doing the mass. Plus 3R. Now we are outside Q zones. We are not looking for any more entries. We are going to wait for the next day, which is Tuesday. And Tuesday, you are going to look for power of 3 bullish to buy. So let's keep playing it. We are down on Monday. So okay, Tuesday Asia range begins. We are not trading in Asia. So now Asia is over. Asia is over as this midnight opening price opens. So midnight opening price, we're expecting price to dip below midnight opening price. And also take sales our liquidity, give us market structure shift in our Q zone, and we start looking for buys. And that will be our daily power of 3, like we learned. We already have our weekly power of 3 on the 1 hour chart, where we open for the week on Monday, dip below weekly opening price, took sales our liquidity of landing session low, entered our 1 hour fair value gap, confirmed the low of the week by breaking structure on the 1 hour chart. So weekly power of 3 is done. We had our entry in New York plus 3R was taken. Now Tuesday we are looking for bullish power of 3 as well, right? We're expecting price to dip below midnight opening price, take liquidity of these lows or Asia low, and then in our Q zone give us a market structure shift. Now I told you that the Q zone start from 2 to 5 a.m. New York time, but I start to look for entries at 2:50 because then landing Q zone has a macro that begins at 2:50. So that's when I start to actively look for entries. So before 2:50, I'm not doing anything. I'm waiting patiently for 2:50 to look for entries. And then when it comes to the New York Q zone, it starts from 7 to 10, but I start to look for entries from the macro, which starts at 8:50. Okay, so get that in mind. So make sure you are writing important points down. So let's wait for our landing Q zone at 8:50. As soon as it's 8:50, our indicator will pop up. Okay, so the yellow indicator has popped up. Let me go back. 1 or 2 candles. Okay, so this yellow box, yeah, that's my indicator. Exactly at 2:50, I'm looking at my market structure on the 5 minutes chart, and I can see that on the 5 minutes chart, we've taken this sell side liquidity. We have a shift in market structure here. Price is inside this fair value gap. We take our buys, stop loss below this swing low, and we are going to target 3R, targeting 3R per trade. The fact that you are bullish for the entire week doesn't mean you're going to make money every session or every day. So now we have an entry. Let's see what happens. So there you go. We took a loss. So -1 hour. Losses are inevitable. Okay. Every strategy has losses. So we have +3 hour and a -1 hour for landing on Tuesday. Let's see if within the Q zone we get any new confirmation. We will still take the buys. We are not following the sells. Okay, remember that our bias on the weekly is bullish. We are looking for buys in Q zones. So we don't get any new confirmation and we are out of Q zone. So let's look at New York Q zone to see if New York Q zone gives us any nice entries. Okay. Come on, what just happened to my internet? Okay, so let's look at New York Q zone. Okay, the green indicator has popped up, so 850. As I said, I start to look for entries from the macro, which is from 850. Okay, though the New York Q zone start at 7, but I'm looking for entries from 850 to 10. So 850 New York Q zone. My weekly profile is still bullish. I'm looking for buys only. I'm not following this market structure, which is bearish. No, I know my weekly profile is bullish, and each and every day I'm looking for bullish power of 3. We took a loss here, but it's fine. But New York will give us something nice. So let's see if we get a market structure shift. If we're able to break market structure here, that would be a nice confirmation. So there you go. We have a market structure shift there above that high. And we have a fair value gap here. That one has been used. So we have another fair value gap here. This is where I'll take my entries, coupled with a breaker block. So it's a very good area to take entries from. You're going to buy from here. You're going to place stop loss below the swing low. Okay, there's a swing low. This is just 12.9 pip stop loss. It's a very good stop loss. You can target 3R. Yeah, targeting 3R per trade. Okay, 3R. Let's see what the market provides. So boom, 3R target has been hit. So we have +3R here. So you can see that it is very important to follow your bias if you are bullish. You shouldn't get swayed off with this sell moves. We know that the weekly profile is bullish. According to our analysis, we are expecting the daily candle to also be bullish. So all this was a Judah swing lower, and the real move is on the upside. So we have +3R, -1R here, and then +3R. So +6, -1, +5. We have up +5R. So the same thing Wednesday, we are looking for buys, bullish power of 3. But this week, Wednesday was CPI news or data, and we don't want to be trading during CPI. Okay, so I'm going to completely skip Wednesday's price action. I'm advising you guys, you shouldn't be trading CPI days. You shouldn't be trading FOMC days. You shouldn't be trading NFP days. Okay, you see what happened? Even though our bias would have played out perfectly in New York Q zone, this New York Q zone 850, you'd have had an entry from this fair value gap, but CPI days you don't want to trade. So I'm skipping completely Wednesday and we go to Thursday. So it was still bullish. It followed our plan or our bias or analysis, but no trades. I wouldn't encourage any student of mine to trade on CPI days. So let's look at the following day, which is Thursday. So Thursday Asian range has started. Thursday midnight opening price has opened. Price is already below the midnight opening price, which is very good because that's what we want to see. A power of 3 below midnight opening price if we are bullish. Also, sell side liquidity should be taken. We have the sweep of this low, which is good. Now let's wait for our Q zone time at 250. So our Q zone time is not yet set. So Q zone time not yet set. 2:30. So Q zone time is not yet set. We have this breaker. Let me mark it out. I'm not taking the entry yet until 250. Let me check this time. This time is 2:45. So the next candle will be 250. So the next candle, as it opens and it trades down into the breaker, we are going to take our entries. So expecting the next candle to give us entry from the breaker, which is 250. Okay. So let's see if it gives us entry. So no entry yet. Now we have an entry in our Q zone. You can see the indicator has popped up. So between 250 to 5, that's why I'm looking for entry. So we have the entry now. Let's target 3R as always. Okay, so 3R. So beautiful trade. Up, 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 up. So boom, profit has been hit right there. Right there, profit has been hit. Plus 3R in landing Q zone. So plus 3R. Beautiful trade. Now we are also in New York Q zone. Let me go. Let me cut some few candles because we want to see if we can catch some entries in New York Q zone. So let's say we didn't get any entries for London and we are expecting buys in New York. Now between 7 and 10 is the entire New York Q zone. But I'm looking for entries at 850. You can see we have power of 3 for New York happening already as we've taken this sell side liquidity. So the power of 3 does not only happen for London. New York can also pose this power of 3, where at 7 we open and we dip below 7 o'clock opening price. So we are looking for market structure shift, and the time we are looking for entries is at 850. Okay, look at the time below 850. So now it's 850. We are looking for market structure shift. So there you go. Liquidity has been taking failure swing down here. You can see that there is this failure swing. After the liquidity grab, failure swing, market structure shift. Okay. So we have this down close candles are your order block. So let's see if we get entry. If we don't get any entry and then we create a fair value gap after the next candle, then I'll use the fair value gap as entry. But for now, order block for entry. So let's see. Okay, so prior to then tap the order block, it has created a fair value gap. So let me map the fair value gap. So that will be my area of entry at the fair value gap. So we are inside our 8:50 to 10 o'clock New York Q zone. Now we have the entry. Let's target 3R. 3R. So let's see. And then boom, that's your profit. 3R profit. Very beautiful trade plus 3R. So you can see that if you are bullish for the week, all you need to do is to follow power of 3 within your Q zones. As simple as that. And you'll be buying every day below midnight opening price in London. And then New York, you're looking for continuation, power of 3 continuations. So power plus 3R. So let's count our profits. Plus 3 minus 1. That will be 6 minus 1. That's plus 5. Plus 3 here, 8. Plus 3 here, 12. So this particular day, we have plus 3 in London, plus 3 in New York Q zone. Very beautiful. That's Thursday. And as I said, for the weekly profile, if we are bullish for the week and from Monday to Thursday, price has been bullish, expect Friday to create the high of the week and retrace back within the range. Okay. So Friday, you don't want to be looking for continuation because price can pull back within the range or simply consolidate. So if I play price, let me go back to the 1 hour chart and I'll show you what Friday just did. Confirm to you that Friday will likely retrace back within the range or consolidate. So see what Friday candle did. Retrace back within the range, took liquidity up, back and up, so consolidated. So Friday, you don't want to be trading because smart money is offloading their long positions. They are taking profits. So price is likely to reverse, retrace back within the weekly range or consolidate, and that's what you saw here. So we are going to talk about thank God it's Friday in later lessons. If the entire week has been bullish, Friday is likely to retrace back within the range. So instead of looking for buys, you look for sales, and that's why we call the thank God it's Friday. If the entire weekly candle was bearish, expect Friday to be slightly bullish for a thank God it's Friday. Okay. But for now, know that your weekly expansion will normally be from Monday to Thursday. So this will be all for this lesson. Your assignment is to go back to previous charts, use the replay mode. If you don't have the premium trading view version, I think it's ideal for you guys to get it. It will help you in your learning process. And look at just once you get it, just go to the weekly charts and then look for a day where price was bullish. If it was bullish, just cut that candle off and start from Monday and start using the replay mode. Start from Monday, see when the low of the week was formed. Start trading the power of 3 for each day following to Thursday. If it was a bearish candle, you can start from here, cut this candle off. Now start looking at playing that candle on the 1 hour chart. See when the high of the week was formed. See how you could have had power of 3 for each of the days to sell. The same for this week. Backtest all of these bearish candles, backtest all of these bullish candles. And that's how you are going to be very good with this weekly and then daily profile, because that's all you need. That's all you need. Weekly profile. If it is bullish, you anticipate the low of the week to be formed. You confirm it by the 1 hour market structure shift from an institutional reference point, not just any market structure shift from anywhere. It should be from an institutional reference point. Once we hit it and we had a market structure shift, that's your low of the week. Now you can start looking for buys within Q zones and then power of 3 buys within Q zones. As simple as that. So now it's your duty to backtest. Catch you guys later.